Good morning, everybody, or good afternoon.
Morning, Ray.
Wow.
Or after, yeah. Good noon.
Whatever.
Greg, I have a quick question. I keep getting asked, well, when are you breaking ground on the central library and when will it be done? So if I had like a date and a date, I could,
So November of 2022, so a year from now, we break ground and that'll start the site work process.
okay,
And then the completion is roughly September of 2024.
good.
So those would be two beginning end.
I will memorize those dates because people keep asking me and I just I don't quite know.
Exactly, yes. And you know what I may do is I might put a little quick, in my monthly report under the schedule section, just a real quick reference to key dates like that.
Oh, that'd be great.
Good.
That'd be
And I'll put it in there, just literally start of construction, end of construction, and the end of construction will be when we're reopening, right? Because as the contractor finishes, then we do some furniture and then before we open back up to the public. But that every month you'll see it and it'll be a quick reference for you.
I like that idea a lot.
Yeah.
Yeah, and I'll
that's
put it
great.
for each individual project
Oh,
That's-
good.
for me to
Good.
do and makes it simple, I think, for you guys to use.
That would be great.
Okay.
Okay, that sounds great. I guess it's time, so I will call the meeting to order. Everybody's here. Welcome, everybody. It's good to see all of your faces. And for all of those of you who are anonymous or not anonymous, but not videoing today, it's good to see your names, and I'm glad you're all here. Our first order of business is the minutes from our October meeting, which we just had. Did people have a chance to review those?
Mhm.
Any additions or corrections? If not, I'd entertain a motion to approve them.
I make a motion to approve the minutes from the October 29 board meeting.
I'll second.
Okay, any discussion? All those in favor? Aye.
Aye.
Okay. All right. Our next order of business is public comments. Are there any members of the public or anyone attending this meeting that would like to make a public comment?
I would
Okay.
like to.
Can you identify yourself, please, and
Yes.
what town you're from?
My name is Cecilia Bryant,
Uh-huh.
and I'm a Redmond resident
Okay.
and a frequent user of our beautiful historic library. And I did not realize until I accessed the plans last week of the proposed expansion that our library would be demolished in this plan. This concerns me for two reasons: the loss of a historic building and the potential loss of library usage for an extended period of time. Last week, I spoke to several patrons in front of the library, and only one was aware of the plan for demolition. The one that was aware had no problem with it, but the others were greatly opposed and surprised. I'm asking you that you reconsider this and pursue an alternative plan that will not demolish our very special library. Thank you.
Okay. Well, thank you very much. It's our policy not to respond directly to public comments when they are submitted, but we really appreciate you taking the time to come and make your concerns known. We'd also, I think, getting your concerns in writing through the public feedback process on our website would also be greatly appreciated. And I encourage you to encourage others in Redmond to submit their comments as well.
Okay, thank you.
Okay, thanks so much for taking the time. Okay, any other public comments? All right, hearing none, we'll close the public comment portion of the meeting and we'll go on to our executive limitations section, our financial conditions and activities monitoring report. Todd?
Thank you. Kind of a shift for us. We've done so much talking about buildings that today we're going to mix in a bunch of finance as well. So first off, the financial conditions and activities. This is it's one of the longer reports, so I'll kind of leave it to the board. I've put my analysis in here. Most of it relates to information that came through the district budget and our external audit. So I will open up to see if there are any questions based on any of the 1 through 13 in the report. Unless you would prefer me to go over each one, which I'd be happy to do as well.
Oh, I think we've probably all read them. So does anybody have any questions of Todd regarding his comments? If not, I would entertain a motion that we're in compliance with the district's financial conditions and activities executive limitations policy.
I'll make the motion. I move that the district is now, according to the report from Director Zuckerberg, the district is in compliance with the district's financial conditions and activities executive limitation policy.
Do I hear a second?
A second.
Okay. Any discussion?
Ask you a question, Todd.
Yes.
You've hired a new CPA.
Yes.
How much are we paying them?
I do not have the exact budget in front of me, and Robert, I hate to put you on the spot, but I don't know if you know that number right off the bat.
I can give you a rough number and then look up the exact, but it was on the order of 35,000. So we determined that it was within the $50,000 limit for our purchasing rules to have the library director make that decision via an informal RFP process.
And we are stopping the other contract?
Yes, so the prior contract CPA's contract actually terminated on the 30th of June in order to ensure that we had continuity of service through the audit
Oh,
period.
I was a little nervous.
I'm sorry?
Oh, sorry. Go ahead.
Okay, in order to make sure that we maintain continuity of service with the contract CPA for last fiscal year through the audit period, we negotiated a short extension of services to cover the finalization of the annual report and financials for the auditor.
So our total external accounting expenses are about 35,000.
For external accounting, let's see, for the approved budget, external accounting is 30,000. The 35,000 that I'm quoting you, that rough number, included both the annual accounting services as well as support through the auditing period. And for auditing, we're budgeted at 30,000 as well to cover fees both from the auditor and from the contract CPA specific to audit support.
Okay,
And if I didn't make it clear, the reason for switching accounting firms had to do with the fact that our previous firm did not have any experience accounting for bond related activity, and our Meridian does. So that was a big reason for our switch.
Right, I think that's covered in some of the material we'll cover during the audit.
right.
Okay, any other questions? Discussion? Okay, I'd entertain a motion, or I mean, all those in favor?
Aye.
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 Opposed? Okay, motion passes. Okay, now, our next item of business is consideration of a resolution to authorize a supplemental budget adjustment for fiscal year 21-22. Robert, do you want to introduce this?
Yes, thank you. And good afternoon to all the members of the board. I want to cast your memory back to May 12th of this year. It was right after the issue of the bond. So we knew what we had in terms of bond funding, and the board adopted a supplemental budget adjustment at that time for fiscal year ending June 30th of 2021 in order to set up the capital projects fund, or fund 400 in our accounts. At the time, the director recommended two motions as part of that supplemental budget. One was for a transfer of funds of about $601,000 from the capital projects fund to the reserve fund. And the other one was for a reimbursement of roughly $1.4 million in order to recategorize the expenditures for land purchase, due diligence, and associated expenses. So at the time that the supplemental budget was adopted, the board appropriated the $601,000 for transfer to the reserve fund. However, when we got to the end of the fiscal year, in discussions with the auditor, we determined that in order to recategorize that $1.4 million from the reserve fund to the capital projects fund, we needed a separate appropriation at the time. And that was not included in the supplemental budget that was passed on May 12th. So in order to do that recategorization, an appropriation of funds is required, and that's the purpose for this supplemental budget adjustment. Because it's 1.4 million, it's less than 10% of the overall budget appropriation for the budget year. And so we're bringing the supplemental budget to the board without pursuing a formal supplemental budget hearing. So the memorandum I included in your board packet has a table of the actual expenditures that compose that category of land purchase, due diligence, and related expenses. In addition, I included the verbiage for a resolution number 8, authorizing the supplemental budget. On attachment A of that resolution, you can see that the appropriations are changed in the exact amount of what we need in order to recategorize those expenses. So the current appropriations for current fiscal year is exactly 220 million. And this change in appropriations would amend the beginning fund balance to $221,404,208. And then once we have that appropriation, then we can perform the recategorization to take those expenditures that were already made, but have them properly categorized under the capital projects fund. So that's what I'm presenting to you. Did you have questions regarding the details of that?
Does anyone have questions regarding this?
I don't.
Okay.
Yeah, Robert.
Mhm.
I thought we can make changes within any specific line item of less than 10% without reconvening the budget committee.
That is
I thought
correct.
the reserve fund is a line item of its own. Capital project fund is a separate line item. We're transferring from one to the other. But that is more than the 10% for the reserve. You have to reconvene the budget committee to do this?
This won't actually require an adjustment to the budget for the reserve fund, because at the time that Todd prepared the budget that was adopted by the board, we had already thought that that money was appropriately recategorized. So it's actually already baked into the appropriation that the board made for the reserve fund for this fiscal year. It was only after the budget was adopted that we started the audit process and discovered that this additional step was going to be necessary.
Right. The money is already in the budget and approved by the budget committee in the reserve fund. I'm asking the question, since this transfer out is more than 10% of the reserve fund, does that require the budget committee to reconvene and approve that change in the budget? Not just a board resolution.
I guess that's the point I'm trying to make, is that the appropriated amount for reserve fund is actually already accounting for the transfer as if it had already happened. So you'll see actually next month when I present the first quarter's financials that the balance forward amount for the reserve fund is short by that 1.4 million because it couldn't be transferred yet. So the balance forward would change, but the appropriation is fixed. Given that the reserve fund is not changing, we're not pursuing a supplemental budget on the reserve fund, and therefore a budget committee wouldn't be appropriate for the reserve fund. We're not actually making a change to the budget there. The only budget change we're making is to the capital project.
So, and to help you with that, Ray, we budgeted 3.5 million in the reserve fund. With these changes, we will actually be at 3.5 million. So there won't be any change in the reserve fund once we have done this. But if you look at the capital projects fund, that one currently is showing 220 million. And with these changes, there would be at 221, 404, 208. So that one does require that's the one that
Is changing.
is changing.
Now I'm quite confused. If the budget already shows the 3 million in the reserve fund, and we're transferring 1.4 million out of it, but it still has 3.5 million as going to the budget.
Well, we're not transferring it out of the reserve fund. This is allowing us to actually put it in the reserve fund.
Well, the way I was reading it is Robert's asking to take the 1.4 million from reserve fund, move it to the capital projects fund. It's coming out of reserve into capital.
So on attachment A, the request, or rather the actual adjustment that's going to be made in the supplemental budget is a transfer out to the capital reserve fund.
Right.
From the capital projects fund.
But in your explanation, you're asking for transfer of 1.4 million from the reserve fund to the bond capital projects fund, and then you want to move it from the bond.
I apologize. I'm so all right. So a brief vocabulary distinction. So we would be transferring funds from the capital projects fund to the reserve fund. In my memorandum, I'm asking for a recategorization from reserve fund to the capital projects fund. That recategorization is the expenditure itself. So in order to categorize the expenditure as coming out of the capital projects fund, there would be an associated transfer on the books from the capital projects fund to the reserve fund.
Robert, is it like a subheading underneath one? Is one a subheading underneath the other one? Is that what this is?
It's not a subheading. It really is, and this is why categorization is the appropriate term here. It's an expenditure that was already made. At the time the expenditure was made, it was categorized under the reserve fund because we didn't have a capital projects fund. So it's really applying the right label or category to where the expenditures came from. The expenditures came from the capital projects fund, which means that the capital projects fund owes the reserve fund the money that the reserve fund spent on that expenditure. And that's that transfer back.
Do you understand that, Cynthia?
What are you asking?
Do you understand what Robert's saying?
Well, I understand what Robert's saying now. Yes, it makes more sense to me.
Maybe it might help if, I don't know. If
What
Brenda's-
did he just say? Because I'm confused.
Well, can I, if you
Let's
give me
not
just a
answer.
second, we might want to see if Brenda Bartlett might want to step in here and see if she has any language that might help us here. Can you help us? We're struggling, Brenda.
Yeah, so in a nutshell, and I'm not sure because it's really complex, so I get why it's hard terminology, but in a nutshell, when we came into the audit, there was, I think it was $1.4 million worth of expenditures that got transferred into the new fund you created. So you created a new capital projects fund, and these expenditures had been paid out of the capital reserve fund, which was appropriate. And when you sold the bond document, the bonding agent said, yes, you can take these expenditures before and put them and use bond proceeds for them. But what happened is that you can't put expenses into a fund that's not been created. So I'm going to use made up dates here. None of these dates are real, but I'm going to give you some example. So let's just say that all of these pre-construction costs, architects, those kind of things were expended in the capital reserve fund between July 1st and March 31st. So they were all of that. And then on April 1st, you created a new fund called Capital Projects Fund. And this Capital Projects Fund is authorized to reimburse those expenses. That's fine. What it can't do is transfer them in from the old date. So you can't say, oh, we had an expenditure we paid in December, and now we're going to put that into the new fund as an expenditure. It has to be a reimbursement. So this all kind of comes down to local budget law. So budget law says, no, you can't put that money in as a capital outlay expenditure. You have to transfer money from the new fund into the old fund and pay it back.
Right.
So it's really just an appropriation category. What you initially tried to do made sense because, you're just going to put it in there. You're allowed to. It's completely fine. It's just that when you put it in as a capital outlay, those all took place before you created the fund, and local budget law says, oh, that's a no-no. That doesn't mean you can't pay for those out of the new fund. You just have to do it as a budget transfer.
So my question is, does this budget transfer require budget committee approval?
I don't, so I haven't looked at that really closely, but I think when we were all talking about it, we had decided it doesn't because it's an appropriation. It's already been appropriated. So when you look at appropriations, as long as you have an appropriation category, you can transfer between them. So as long as the, and again, I haven't looked at your 21, 22 budget. So I can't say that with any, but Robert and Todd probably can better address that. But as long as you already had the funds appropriated, it's not that you're spending anything differently.
Right, it's just a reimbursement essentially.
Yeah.
Now, I know what we were trying to do, which was to cover the expenses for the land purchase
Right.
through the bond sales, for the bond proceeds, after the fact of the land purchase. And we had asked, is this legal? And Todd had said, yeah, we can do that.
And you can.
But now my question is, when we have to change these funds, and it's more than 10% of any particular fund, does state law require us to go back to the budget committee? Because I'm not hearing from Todd that this was
Only
already
if
put
you're-
into the
I'm
budget
sorry.
prior to, the actions that we took to create the budget.
Yeah, it's
Right,
only
so-
if you're
'cause I don't
spending
see-
more. It's only if you're spending 10% more. So as long as you are staying within the fund's entire appropriation. And so when we talk about whether a supplemental budget is needed,
Mhm.
we don't look at it as each category 10%. We say, okay, you said you were going to do capital outlays of this, you were going to do transfers of this. The only exception might be is that if you didn't initially have an appropriation category in there, if you create a new appropriation category, that often will trigger a supplemental budget requirement, but not pulling back in the budget committee, but more doing it with public notice of a supplemental budget will be considered. So
But
when you're
appropriations means the fund that it's coming out of, not any funds that it's going into.
So an appropriation is actually just the spending line. So an appropriation could be capital outlay. It could be a transfer. It could be a contingency. It could be materials and services. So that's an appropriation. And when you decide what, you look at all of those things added together in one lump sum, and that's where you decide if you're spending more, that's where 10% gets kicked in.
And
If
the only
you're creating
place,
a new appropriation category, there's another step as well, but you don't have to recall the budget committee unless you're spending more than 10% of your entire appropriation altogether. And I don't believe that's what's happening here. They're just
right, the
repairs.
only fund where spending is occurring with this supplemental budget is the transfer out from the capital projects fund. So the capital projects fund is where we made our assessment that it is less than 10%, since overall appropriations for the capital projects fund was in the order of 15 million, and this was a 1.4 million addition.
Right.
No, wait, you're not taking out of capital projects fund. You're wanting to take it out of reserve fund into the capital projects
sir.
fund.
No,
And then
No,
transfer from capital reserve fund
No,
to
no,
capital projects fund. Isn't that what you wrote here?
no, that we're planning on transferring the money into the reserve fund to replenish the reserve fund for the expenditure that was made in the last fiscal year for the land purchase.
so
Oh.
as you'll see on your screen, as we came out of the budget committee, we expected to have $3.5 million in the reserve fund. Right now, until the board actually makes this decision, it's currently categorized at $1,404,207.81 less right now. Once you make this recategorization, we'll actually be up to the number we anticipated. We will not be spending we're not anticipating spending any money out of the reserve fund. So that's what we're handling there. The big change is going to come in this fund, where we had projected that we would be starting with 220 million. We'll actually be starting with 221.4 million because it hasn't been categorized out of here yet. And
Because
this
it
is
hasn't
the
been one.
Bond capital fund is the money will be coming out of the bond capital fund.
Wait, go back to the previous. The reserve fund,
Yes.
right. So where's the 1.4 million in here? As part of
It will be
balance
part,
forward?
right now, we had expected it to be part of the balance forward.
That's right.
Uh-huh,
In actuality, we didn't bring this much forward because it's still categorized in the bond capital fund. So we need to get that money into the capital fund to get this up to 3.5.
right, this is the reserve fund.
Yes.
Are you saying this is the bond capital reserve
No,
fund?
this
No,
is the
This is
reserve
the
fund.
reserve fund.
Right, this is the reserve fund where you want to take the 1.4.
We want to add 1.4 to the reserve fund.
So,
Right, but what I'm reading
Ray,
attachment A is you're saying you want to transfer out. Oh, you're saying not reserve fund, capital reserve fund.
the capital reserve fund is this fund that we're looking at.
Also, there's only one reserve fund. It's called the capital reserve fund, right?
This is it.
This is it.
Right.
Yes.
This
And
is
you
the
wanna
reserve
move-
fund that we've had for years.
Right.
Yeah.
And you want to move 1.4 million out of this fund.
No, sir.
into this
No,
fund.
Well, your explanation says in the second bullet.
The second bullet in the explanation was what the board passed on May 12th. And again, that was a recategorization, not a transfer out. So what we have here today is we have a balance forward that was adopted by the board at 3.5 million.
Right.
When in actuality, the balance forward for that fund is only 2.1 million. It's shy by 1.4. And the reason it's shy is because the reserve fund is still owed money from the capital projects fund. That's what we're proposing. We're proposing the capital projects fund spend 1.4 million more than was appropriated originally when the budget was adopted in order to refund the reserve fund for the purchase of the land.
So there is an expenditure here.
And the expenditure is on the capital projects fund, but yes.
Do we have to notify the public of this?
It is less than 10%, so the notification to the public would be after the resolution is adopted.
it falls within our budget rules.
Yes.
If I'm understanding right, we voted to recategorize the money. We never voted to actually move it. So now we're voting to move it.
Move it, right.
By the-
That's a great summary, I think.
Thank you. That's very good. And thank you. And I'll point out that if this seems complicated, it is. We have many discussions. There's different ways to interpret this. Our accountant felt that this was actually the appropriate way to do it. And after Brenda looked at it and kind of looked at the budget law, we want to make sure that we're doing everything just right. So we do need to do exactly what Bonnie just said. We already decided to recategorize it. We need to do that final step of actually
Transferring it. Well, based on that, I would entertain a motion if people are ready to make a motion on this.
I'll make the motion to move $1,404,200.
Wait, I think Robert has some suggested language for you in the chat because really we're authorizing the resolution.
Resolution.
Okay, I was just reading from memorandum. Okay.
Yes.
I make a motion I move to approve resolution number 8, authorizing a supplemental budget adjustment for fiscal year 2021-22.
I second.
Any further discussion?
Yeah, I'm gonna vote against because I think we should notify the public of this, because 1.4 million is a lot of money and it was totally confusing to me here. It should be explained to the public because it's their money.
But we've already sort of, in essence, approved it. We just didn't move it. That's what
Yeah.
I
So
understand.
so the action has been taken, we just didn't authorize the actual allocation.
Still rather confusing.
I agree, it's a confusing topic, but I think I have confidence that Brenda and Robert both have looked at this, our CPAs have looked at it. So all of our financial advisors agree, and Todd agrees that this is the right course of action. And I feel confident that they would not recommend anything that wasn't legal and proper. So based on that advice, I feel confident that this is an appropriate resolution.
Well, I feel more confident with this amount of money being moved around. That's public money, that we may want to explain what we're doing a little bit better to the public before we pass the resolution. Even though you're going to do it, I know you're going to pass it, but I'm going to vote against it.
Okay, that is certainly your prerogative, Ray.
Ray, I do want to make one point. You even said, we've all said this is complicated. Every one of us has said this is complicated. And we've studied it more than the general public has. So I don't know how the general public would not find this complicated.
Right.
I think it would confuse the general public a lot more than, it's not that we're hiding anything, certainly part of the budget. But I think it would confuse the general public. Terribly.
Well, the general public is already pretty well confused about the entire project, so I don't see how they get more confused. I just think we need to be a little transparent when we're dealing with this sum of money.
Well, I think we are being transparent, and I don't have any issue with that. I think Robert and Brenda both have explained it to the point where I understand it. So.
Does the public have access to any of this budget information? Can they go to our?
Yeah, they can go online. The budget's posted on our website, and all of our, this meeting will be available to the public as well in case people have questions. So.
Okay.
So if the public were to go and read the resolution and appendix of the attachment A, they would have a clear understanding of what's going on, much better than we had today, with explanation. So that's what I'm hearing from the board. So if that's the way the majority of the board feels, so be it.
Yeah.
I will also point out that we are not required to have a supplemental budget hearing based on the numbers.
Right. Okay, well, I would,
It's been moved and seconded.
huh?
It's been moved and
seconded.
Seconded, exactly. You're calling for the question. All those in favor? Aye.
Aye.
Opposed? Okay, motion passes. Okay. Next up is our financial conditions and activities external audit report.
And so basically, this part is your annual audit. And I will hand it over to Brenda. She's just completed. This is probably a more difficult one with the addition of bond stuff. So take it away, Brenda.
All right. Well, thanks as usual for having me. I enjoy meeting with you annually to talk about the audit. I'm going to start with our independent auditor's report. I don't know where this is for you. For me, it's page 1, but not marked page 1. It's right before page 2, though, if that helps. and it's called Independent Auditors Report. So this is the report that, you know, comes from a lot of work with management. And so basically what we say is that we've audited the accompanying financial statements as of June 30, 2021. And we also go on in that second paragraph to say that management's responsibility is for the financial statements. And in this case, management contracts with an external CPA to build these financial statements. So what we do is we look at the underlying documentation and we make sure that what's in these financial statements is reasonably stated. So in other words, some of the things that you might see us doing is we go and look at the actual bank balance. And so if management says there's $100 in the bank, we go check with the bank to make sure there's really $100 there. So we look at those things and we test them and make sure that what they've put in their financial statement is a reasonable reflection of the operations for that year. And so then our third paragraph there is it kind of outlays what I was saying. That's our responsibility. And there at the very, very bottom, we say that we believe that the evidence that we obtained, all those different items that we obtain is sufficient and appropriate to provide a basis for our opinion. And right there at the top of page 2 is our opinion. And this is the opinion you want. We call this an unmodified opinion. And it says that based on all of the procedures that we did during the course of the audit, we believe the financial statements present fairly in all material respects the financial position of the library district, both on an accrual basis and the governmental fund financial. The remainder of our report talks a little bit about things that are inside the report that aren't part of your basic financial statements that we audited. So for example, there's management's discussion and analysis. And this is something that management goes through and they take pieces and it's prescribed by governmental auditing, by actually the GASB, the Government Accounting Standards Board. And they say, these are the things that we think are important for you to address. And so it's a very small slice of the important things that happened. We don't audit that, but we do read it and make sure it's consistent with the audit information that we have. And I always, every year, you'll hear me put a plug in for reading that, if nothing else, because it's a really long document, but it's a great place to see what happened, the important things, new capital assets, new debt, you know, how you're doing as far as, you know, net position. Are you increasing that? Are you decreasing that? And what's going on? So it's a nice bite-sized information of really what happened. So I always put a plug in for there. At the very bottom there, when in Oregon for municipalities, number one, you're required to have an audit. That's one of the Oregon minimum standards for corporations, municipal corporations. We as auditors are required to report on that as well. So this report I'm talking about right now is numbers. It's based on numbers and information about the numbers. This last report here is actually based on really compliance. There's certain things that the state believes that municipal corporations should be responsible for. And it's so important to them that they ask the auditors to, in addition to the financial audit, look at these items too and test them. And so I'm going to go clear to the back of this report, which looks to be page 63. And this is that report. So this is the report that says first page is compliance. And what you'll see there is that we look at the things that are bulleted. Not all of these apply to all corporations. We do try to just keep it to the list of things that we looked at for the library district. We look at to make sure that your surplus bank account funds are kept in an approved bank. So the state puts out an approved bank and they say these banks have sufficient collateralization in the event of something really bad happening and you have more money in there than federal deposit insurance will cover. So we make sure that you're investing in a bank that is on that list. We look to make sure that you haven't taken on more debt than you're legally able to do. we look at your budget process. That's how this budget issue came up. And we said, look, we think this needed to be handled differently. And so we look at that to make sure that you're in compliance. We look to make sure that you've got insurance in force and that it's reasonable. We look at any grants or donations that you receive. So one of the things the state thinks is very important is if you receive a grant from somebody and they say, I only want you to spend this way, that you actually spend it that way. So we may not look at a $2,000 grant, but we're going to look at some of those bigger ones that have restrictions and just say, did the library management make sure they complied with those? And if they didn't, this is where we would report that. We look at this authorized investment of surplus funds is a little bit different than the public funds I talked about earlier. This is where are you investing the big funds that doesn't go in the bank, that's not, so for example, the LGIP, or for this year, first time in a custody account with US Bank. And so we make sure that those are the types of things that the state allows a municipal corporation to invest in. You can't go out and do, crazy investments per state law. And we just try to make sure that that's not happening. And then of course, we also look at your procedures over large public contracts and purchasing. So we look at, that's one of the things that the library's always been really strong on, probably going well over and above what the law says. So we've never, ever had an issue there, but we always look. We look to make sure that you publish it appropriately. We look to make sure that the methodology for selection is in accordance with state law where it's stated and those kind of things. So we look at all of those things. And so basically what we're saying here is in connection with our testing, nothing came to our attention that caused us to believe that the library district wasn't in substantial compliance with all of these things. And I'm going to talk about that budget issue as well, because we brought it to your attention and we said, hey, we think you did this wrong. We actually kind of went the extra mile because it's fuzzy and confusing, as we all know. We went to the Department of Revenue and said, hey, are we on the right track here? Is this a problem? And basically what they said was it's an interesting little nuance in that it had to be fixed. It couldn't just be reported as a violation. So that's why you're not seeing it in this report as a violation. The Department of Revenue said, look, there was no fund there. That fund wasn't created until X date. So it's not a violation, it's a you can't do it. So it was an interesting nuance to me that we were talking to them about it, is that oftentimes we'll say, look, you did this wrong, but there's no path to correct it. You just have to do better next time. And that's when we reported in this report. But this is one of those things where they're saying, oh no, this is just, you just can't do it. It has to be fixed. And so it was really actually the first time I've run across something like that. It was interesting to me, but that's why it's not being reported, because it's been fixed. And so I wanted to kind of bring that up again and say, yeah, we brought up a budget issue, but it's not in this report. And that's why. That makes sense.
Mhm.
So page 2, we also have to look at your internal controls. And if we find areas where we believe there's control deficiencies, we have to report that both to you as the board and in this letter. And so what you'll see there is on that second page, page 64, the second paragraph, we just put them on notice that there were certain matters that we determined were material weaknesses, and we've reported those findings to the district's board. And so that is going to take me to that letter. And the letter, I don't know how you have it in your package. I apologize. Do you have it labeled, or are you guys able to find that? Do you see that at this point?
Think so.
Which
Okay.
letter are you referring
Yeah,
to?
that's what's hard because they're both basically the same, but they both start, okay, this one starts in planning and performing our audit of the financial statement. So
Yeah.
it's a little bit different first sentence.
Oh,
They both
okay,
look
great.
very, very similar. So there's a couple different internal control findings. One is what we call a significant deficiency, and we will report that. Those are the things where we think they're important, but they would, in our opinion, would never rise to the level of creating a material misstatement, meaning an error that needs to be fixed in order for us to provide an unmodified opinion. The material weaknesses are a little bit more serious than that, and that is that we either believe that they would result in an error that's material, or they did result in an error that was material. And so this is the latter situation. And there's a lot of different controls. The ones I think that are very, very important to the board and the public are those kind of controls that actually control the money. You want to make sure that when you pay a bill, it is to somebody appropriate. It is a business related event. You want to make sure that if somebody gives you money, that you spend it the way that you've said you will. So those are those kinds of controls, and those are very solid. So I do want to give you that sort of reassurance at this point. Those kind of controls are solid. We're talking about actual financial reporting controls, which are still important. But as far as making sure that the money is spent appropriately and the money is being handled appropriately, this is a different animal. So what this is at the year end, both the Secretary of State, the Governmental Accounting Standards Board, they say there are certain ways to report things. And these are specific to your accrual-based financial statements for the most part, making sure that things are appropriately accounted for. A lot of times these are super complex areas, and coincidentally, that's what these two deficiencies are. They're pretty complex areas. So the first one is where you have investment accounting. And so for the first time, the LGIP investing in that, really easy. It's like a savings account. You put money in, it draws interest, really easy to account for. But the LGIP won't let you put all your money there when you have a bond like this. They'll say, yeah, we'll take most of it, but the rest you have to find somewhere else to park it. And so at this point, that usually ends up in some kind of custodial account. I believe this one's at US Bank. And what they do is they go out and buy, oftentimes they'll buy treasury bonds, municipal bonds, because again, you have to be in compliance with what the state says you can invest in. And those are some of the safest places to invest the money. Also, what happens is that when you buy a bond, you don't always buy it at the right time. So the bonds pay interest every 6 months. Maybe you buy that in the middle of that. And so when you buy it, you pay $100 for the bond, but they also charge you $10 for the interest that you're going to get in 3 months but didn't earn, if that makes sense. So what happens is you have to record that as an asset. You have to call that an asset and say it's called interest receivable. So I bought a bond for $100 and I bought $10 worth of interest receivable that I'm going to get back in 3 months. What the library accounting did was they put that to an expense account, knowing that they were going to get the revenue back later. Kind of convoluted how it got there, but the end result was, instead of being on an asset account, it was showing as an expense, and it really overstated and made it look like there was some losses on these investments that hadn't really occurred. And then what would happen next year when you received that, you'd have revenue from interest way more than you actually got because you had bought some of that. This is a really complex area. And I would say that everybody in the accounting was aware that this was happening. They knew they were buying the interest. So a lot of the good economic things happened. They knew they were buying interest. Economically, everything works out. Economically, you buy a bond for $100 and you earned $10 of interest, and that all works out. But what the reporting standards are is we do something now when it crosses a fiscal year. And again, this wouldn't matter except for it crossed a fiscal year. If it all happened within 1 year, nothing happens, it's fine. And so it's a pretty confusing area. And we had to make a pretty material adjustment. And so when we do that, we say, look, there's just no controls over making sure you report your interest receivable correctly. Does that make sense? Want
Yeah.
to make sure it's a real complex area. Okay, great. So then the next thing had to do with the bond project accounting. And this again is really complex and it has a lot to do with reporting. So if I have a bond, if I have a lot of different costs in a bond, and maybe I'm paying architects, maybe I'm paying engineers, maybe I'm paying a little bit of, land improvements, I'm digging a well, I don't know, what have you. All of those things for fund accounting, the budgetary accounting, they're the same thing. You look at them, they're spent, it's appropriate, it's within, it's totally authorized by the bond, everything's good. But at year end, you have to turn around and say, okay, now we need to classify those because some of those might be part of the eventual building. And some of those might be just a regular old expense, but it's on a very different basis than it is for your budgetary accounting. We have to go and almost pretend like we're a real business. We're no longer a municipality. Now we have to do full accrual statement and we have to capitalize our assets so that we show the building. Whereas in the budgetary, it's just a cost. It's a cost that we incurred. So that's where this slide is, that what really needed to happen was all of those costs incurred prior to the end of the year needed to be analyzed to determine whether they were expenses, construction in progress, or part of the land capitalization. And that was the piece that was missed before the books came to us. So as we're auditing, we're saying, oh, this isn't accounted for. I send it back to Robert, and Robert did the work. He told me what all of these were and understood it. But because it didn't come to me that way, then as an auditor, my job is to say, okay, there was no control over that. That didn't happen before it came to the auditor. So we have a material weakness there that needs to be addressed.
And these were expenses that happened up until June 30th, correct?
Exactly.
So
Right.
it was the really initial things that were done.
Right. And it'll be, and quite honestly, it's going to be ongoing. I think when I dived in here this to start the meeting, you were talking to somebody and he was saying, I'll tell you when we're going to break ground. Well, until that building is completed, this issue is ongoing because you have to keep it in these special buckets. And then when it's completed and placed in service, you have to do something different with it. So this is an ongoing issue until the bond is expended and all the projects are completed,
Right.
which will obviously be years. So why we bring it to your attention is to say, okay, hey, we didn't see that control here working this year. You're going to want to make sure you've got a control going forward. Now, side note, actually the management had already provided for this. They did talk with the external CPA who indicated they didn't have this kind of expertise. And they went and found somebody who did have this expertise who will be working this through. But what happens is in the transition, the previous contract CPA hadn't done it, and the new contract CPA is focused on July 1, 2021, right? So it was a transitional issue. I still have to report it. That's my job. But
Right.
But I do believe it's very well taken care of at this point. And so I always like to make sure I give you the context because it sounds terrible on paper, but there is definitely context behind that.
Mhm.
Any
Okay.
questions?
On the report, is there, the only questions that I had, and these aren't really questions, but I was hoping someone on the management discussion and analysis, I guess that would be Robert. But on page 3, the financial highlights, I just wondered if somebody could kind of quickly run us through that.
Are you starting with the first bullet? Is that?
Yeah, just that there's 4 bullets. Can you just
Okay.
kind of walk us through what all that means? And
Okay. Well, part of this, I have to fully admit, the first statement was given to us by our CPA, so. And that was the issue of liabilities and assets. Sorry, I'm trying to.
And I can weigh in there, Todd, if you want,
Thank you.
because I've written these before too. I didn't write this one.
Yeah.
But basically, this is another one of those required things where they're saying you have assets of a certain amount and you have liabilities of a certain amount, and you literally just do the math there and say, what's left over is $20 million, right? And then in that 20 million, we're required to tell you what some of those things are. So in other words, of that 20 million, 11.6 million is your investment in capital assets. So things that you've constructed and built, less the debt that you've taken on to do that, that's remaining unpaid. The other thing is there's a portion of that leftover, which is your assets minus your liabilities, that is actually restricted that you can't use. And that is that legal restriction for your bond capital projects and also for your capital reserve account, because those are legally restricted according to the way you set up those funds. And then another $141,000 is for grant requirements. So remember, I was telling you that we audit those and we say, you know, these grantors gave you a grant and they said you may only spend it this way. If you can't spend it by the end of the year, you have to report that that's restricted, and just remember that and track it so that you don't spend it on something that it wasn't intended to be spent on. So the rest of it, that 4.7 million there at the very last sentence, is unrestricted, and it's what you actually could do something with, unrelated to, it's not your capital assets and it's not things that are restricted. Does that make sense?
It does.
Under the net position decreasing, that actually comes from the report on page 12 and 13, comparing assets, liabilities, and net position. I'll point out that these are kind of different than what you normally look at with our straight budget numbers. And my apologies, normally we would have our accountant on hand to help with this. Unfortunately, that's the accounting firm that we no longer have with us. So, and so maybe let's see if there are any questions on the net position statements on 12 and 13 for that bullet. And again, something that's different from our normal budget accounting. This brings in all of the pension related liabilities and assets, which it's not going to show up in our normal budgeting process.
Right.
Yeah, and Todd, if I can add to the bullet point about net position decreasing, a majority of that decrease is due to that change in investment value that Brenda referenced earlier. The fact that we had the bond money, and then we went out into the open market and bought U.S. Treasury notes and other low risk securities, but typically the investment was made in the middle of the maturity period for those bonds. And so there's a certain amount of like prepay on the interest that you don't get on the back because you bought it in the middle of the maturity. So of that 600,000 decrease in net position, 375,000 was that change in the investment value and the prepay on the interest.
So you're taking that as an expense rather than an
No.
asset?
So again, net position really is a, I'm sorry, the net position, the decrease in net position it's a slightly different thing. I've gotten the two confused. It is related to a change in the actual value of the investments. So we purchase those bonds at a certain time, and then as the bond market rises and falls, the overall investment can change in that value. So a lot of what we're seeing in the decrease in net position is just that decrease in the overall value of the investment.
Right. Yeah, it's not prepaid interest. into
Right.
that. Okay, so it's actually bond fluctuation,
It's bond fluctuation, yeah.
bad investment. It's what the state tells us to invest in. That's
It
it.
also, it often also, one of the things that really can drive that is your unfunded pension liability. I mean, I blame that for everything, but it tends to be true. Every year they reset that, and it seems like every year it just increases.
Well,
It just does. So, you know, everybody's that unfunded liability, unless the stock, and the stock market's been great, so it's been good, but that the pension benefit in Oregon is quite rich for, as we all know, you know, and it just costs a lot. And so now that we book that, we didn't book it for a long time. Now that we book it, you do see that it does erode your assets year over year. It just does. And at some point, I think with the changes they've made, that will start resetting, but that's not for years. So a lot of times that's what you see there as well.
wasn't there a state requirement that we put in a certain amount? Was it 10% every year towards our unfunded liability, natural funding?
Yeah, I don't know what the percentage is, but I do know there is a piece of your PERS payment that is going toward the unfunded liability, and the
Right.
rest of it's going toward current benefits, you know, we hope. And it's all actuarial, you know, calculated. But I haven't, since we've been booking it, I haven't seen it go down.
Oh,
I've
no,
always seen it creeping up a bit.
I don't
So,
think it's ever going to go down. We still have a lot of tier 1, tier 2 people.
right. And
Going to
that's what I'm
retire.
saying, you know,
And their
as tier 1
spouses.
and tier 2, you know, retire and some of that starts getting paid out, but it'll take years. So,
Correct me if I'm wrong. I think the PERS benefit accrues to the surviving spouse. So it's not just the employee.
yeah, I don't know for how long that lasts. I'm not real
I think
familiar
it's
with
for their
that.
lifetime.
Yeah.
Which is like, hey, I went into the wrong business to begin with. We should have gone public employees.
Right.
Well, getting back to the matter at hand,
Yeah.
does anybody have any additional questions for Brenda or Robert or Todd on the audit?
I have one more letter to go through.
Okay, well, and I just
that's
wanted to
okay.
clarify on that letter, Brenda. So you had 2 recommendations on that, the letter that you were referring to, that we review our year-end accounting with contract CPA prior to closing the books, regarding investment accounting, and that we analyze the bond project accounting at a minimum of at least once a year. And you, based on the changes that we've made, you feel like both areas have been addressed?
Yep. I feel pretty confident that, you know, they've got an external CPA. That CPA is a governmental type auditing firm similar to ours, you know, that's a good way to go to get that deficiency to clear.
Right. Okay. All right. Now your second letter.
All right. So this is the letter you're going to get every single year. So everybody gets a letter every year. This is really just a recap of how the audit went. So it starts with what we've done. We've audited the financial statements, and, you know, we're letting you know that our professional standards require that we provide you with this information. So the first thing that we talk about is, again, as in the report, management's responsible for the appropriate financial reporting and accounting. All of the significant accounting policies that management uses are described in note 1 to the financial statements. We didn't find any transactions entered into the district that didn't have authoritative guidance. So, you know, sometimes you'll find that we didn't have anything like that. There are always accounting estimates in the financial statement. So when I come in and I say cash is $100, cash is $100. That's okay, that's not an estimate. But when I come in and I try to audit what we were just talking about, for example, in the pension liability, that's set by an actuary. So that could change, and in fact will change every year. So those are the ones that are, they're subject to the most sensitivity and can change. And so that's pension related balances, and also the post-employment related benefit obligations, which are related to the Oregon requirement to keep retirees on health insurance. There's an estimated future cost to that gets actuarially calculated. At the top of page 2, we had no difficulties in performing the audit. Corrected and uncorrected misstatements we've talked about. Those were just the bond project accounting and the investment receivable. We had no disagreements with management. We do ask Todd to sign a letter every year, kind of clarifying that they've given us all the information we've asked for, provided all the documents that we've asked for, that they don't know about any litigation that they haven't informed us about. So just a lot of representations that we get. Management consultations with other independent accountants. In your case, because you engage an external CPA, that's who you use to consult with about various GAAP reporting issues. I always, if I find something in a financial statement that gives me pause as I'm auditing it, I will bring it up with management and the external CPA, and we'll hash it out and try to decide whether that was the appropriate way to account for it. But that's the extent of that. I always have to let you know if somebody goes out and gets a second opinion on something that I've said, and that's not the relationship that's going on now. It's really just they're part of the management team. And so when I work with the external CPA, it's as if they're management. At the top of page 3, that very end, we talked a lot about that already when I went through the report. There's a lot of stuff inside your report that's not audited. Some of it's required, like the management discussion analysis, and some of it's really interesting. Other things may not be as useful, but end up usually, I think, being useful by bonding people. So a lot of what's in here that we don't pay a lot of attention to, the bonding people do. So that's it. That's it for that letter.
Brenda, I have a question for you.
Okay.
One thing, especially with bringing in all the pension stuff, and I understand why the state wants that, but I'm just trying to look at this from the point of view of a board member. Really, if they're really trying to get down to the brass tacks of, did we spend what we said we'd spend? It seems like the reports that start on page 58, where they actually go through the budget comparisons.
Yep.
I mean, is that something you might recommend to a board, just to say, if you're trying to compare what you're seeing with what you see in the budget process?
Yeah, I think that's a good point. Those are really good. Those are really good reports to look at. Also, the reports on pages 14 and 16 tend to bring the library as a whole, all the funds together. So it's not measured against the budget, but it's a nice presentation of what really happened on an economic basis. So if you think about economically what happened, we brought in this amount, we put out this amount. It doesn't have anything to do with an unfunded pension liability that's gonna be, in 30 years. It has really a lot to do with what happened this year and what do we have at the end to spend next year. So 14, 16, and then all of those budgetary schedules that Todd referenced. The only problem with those budgetary schedules is they're just on one fund, so you can't put them all together and see what we do. So I think those all together complement each other a lot.
Mhm.
Okay, thank you.
I had one other question. It's on page 8, and I think it was referenced in another area also, but on page 8, at the very top, it says district overall spending increased by 1,147,000. And I just wondered, why is that normal, and why the spending would increase?
Likely because of I mean, there's all kinds of things going on up and down, but my guess is basically the bond project. So as you're funding costs to get the projects going, you're going to be spending more than you've spent in the past. And you're going to see that for the fiscal year end June 30, 22, only it's going to be a way bigger number probably.
And wouldn't that also reflect the CARES Act funding and things like that, Todd?
Yeah, so anything, I think a lot of CARES Act might have been in the previous year, but there was still some of that. So anytime you get grants or external money that's, you know, outside of the regular funding of property taxes, you're going to see spending increase because you have new resources. So anytime you get new resources, spending goes up.
Yeah, and back to the charts that were recommended, page 14 really does a good job of doing a little bit more of a dive into that side-by-side analysis of how did we spend in the certain major categories in 2020 versus 2021. You can also see that on page 16, I believe.
Page 16.
Yeah, where you get that comparison. So that one really sheds a light on, okay, so why did things go up? And you do see there was an increase in library services, but you also have this new capital projects fund that accounts for 1 million of that money.
And that's definitely correct, especially with the last year. We actually did not spend as much as we anticipated in our general fund, just because our services were down, our hours were down. So most of this is and should be in the bond related activities.
Okay. Okay.
Okay. Any other questions for Brenda or for Robert or Todd? I think do we need a motion on this to accept the audit?
I think we do.
I think we do.
And let me just give you the.
And if nobody has any more questions, I'll bow out.
Okay.
Are we good? Okay.
All right. Thank you so much, Brenda. We
Yeah, it was
appreciate your
nice to
thorough.
see everybody again this year. Thank you so much.
Okay, thanks a lot.
Bye-bye.
Okay, suggested language for approving the external audit. Or I mean, I think it's pretty simple.
I'm kind of looking, it looks like last year we didn't have a motion, so.
Okay, well, if someone would care to make a motion that we approve the external audit.
I will move to we accept the external audit.
And I'll second.
Okay, any further discussion? All those in favor? Aye.
Aye.
Okay. All right, and now we're on to the audit plan of action. So, Robert?
I promise this
You
one's less
again.
confusing. Yeah, so this one is directly to follow the audit. So one of the state requirements is whenever there is a finding that is deemed material as a material weakness, we are required to develop a plan of action to address it, to have it approved and signed by the board, and then filed with the state. So we've really talked to the nuts and bolts of this. I'd just like to sum it up in two major things that we're doing going forward. We've hired a new contract CPA to start with the new fiscal year. Marina and Company is the name of the firm. They have extensive experience, not just with public entities and accounting for fund accounting, but specific to management of bond and capital improvement projects. So that's the first thing, new expertise on hand as part of the plan of action. And then the second is new processes. And this is one of the places where we're having an annual audit makes us stronger as an organization, because by identifying these weaknesses and by going through the process of trying to address and correct them, we develop new tools going forward that will help keep us accountable. So as Brenda mentioned, I had to do a bit of analysis for us to untangle which expenditures were actual investments in fixed assets and which ones were part of the normal course of running this additional improvement project. So which were out and out expenses and which actually were investments in new assets that we're putting into place. So part of that process of uncovering that information and doing the analysis was to develop a new tool. It was essentially a spreadsheet where every month now, when our owner's representative provides us with a list of the various expenses that we're performing a draw on. We receive that monthly draw from Greg with an itemized breakdown of what it's for, how much of that is fee, how much of that is reimbursement, and then which work package it falls under. I take that information and I'm able to put that into that analysis tool that we developed for last fiscal year, so that going forward, we've got that broken out and booked properly against either asset or expenditure. That's part one of the new process in this plan of action. Part two of this process change is regular review with this new contract CPA to make sure that we are understanding the complexities and the subtle distinctions in this particular area of accounting.
Right. Because I can imagine it does require a lot of fine accounting decisions that are complex.
Yes. Well, I think today's discussion is a great example of that. Like, there are a lot of these kinds of subtle distinctions and lots of different ways to think about it. And sometimes it can get very complicated, and certainly it's really good to have professional guidance on that to keep us in compliance with state standards and with GASB.
I know in past years, in past audits, there's sometimes been just a disagreement about application of an accounting principle that is beyond the scope of most laymen, but it's more of a philosophical decision rather than a cut and dried money decision, so it's yeah, I think this is complex, and I'm glad we have somebody on board now that really has some expertise in this.
So I've put in another recommended motion language, but I'd like to ask if you had any other questions for me about the plan of action that we're proposing.
Any further questions, discussion?
So your report, you'll meet with the new CPA, Mirren, the company?
Marina, yes.
Marin, and they're out of what, Portland or Lake Oswego?
They're based in Tualatin.
Tualatin, yeah.
Yeah.
And you'll meet with them quarterly, which is sufficient?
Actually, I meet with them regularly, like more frequently than monthly, but to review these new processes, this new information, it is at least quarterly. So essentially, in the plan of action, the way I documented it would coincide with our quarterly review of the financial statements that we prepare for the board. So throughout that quarter, several times a month, we're checking in with the accountant about various decisions that we're making with new things that we haven't encountered in the past.
So I would ask that if there's anything within that quarter, since you're meeting with them much more regularly, if something comes up that should be presented to the board and introduced or given to us for our information, that you do that, not just wait for quarterly.
Yes, absolutely, I can do that.
Thank you.
And if there's ever a something that might rise to require a working meeting, we can certainly propose that too. If there's certain areas that you really want to dig into with the accountant so that you have a more full understanding.
Good.
Okay. Any other further questions, or would someone like to propose a motion? Robert's put a recommended motion in the chat.
I'll do that, Ann.
Okay,
I move to adopt the plan of action to address internal control deficiencies identified during the audit of fiscal year 2020 to 2021, and that a signed copy of that plan be filed with the Oregon Secretary of State.
okay, do I hear a second?
I'll
Cynthia? Okay, any further discussion? All those in favor? Aye.
Aye.
Okay, opposed? Motion passes. Okay, thank you very much, Robert. Thanks for
Thank you
leading
too.
us through all of this. I know it's,
Well, thanks for bearing with me.
yeah,
Anne, I just wanted to kind of reiterate that Robert started right at the time, I think the week we were just starting to sell these bonds. So, and it was kind of an eye opener for us that we had a CPA firm that flat out said, we don't know how to do bonds.
yeah.
So we were very lucky to be able to connect with Meridian. And I just can't highlight how great a job Robert has done working with them, working with our auditor through some very complex issues.
Right. I was thinking that as we were having these discussions that you came on, right? I guess the good news is at the beginning of a critical piece, but right in the midst of all of this as well. So thank you for all your efforts.
Thank you very much.
Okay. Next we have our bond update from Greg. Hi, Greg.
Hi, everyone.
Hi.
Good to see you again. I think this one will be much shorter than the last one, being it was just a couple weeks ago. I can tell you that, we covered a lot of topics last month when we got together relative to the report, our master development schedule. We're always updating that. We're going to have an update this month, just minor adjustments, nothing major. We're still tracking to our master development schedule and moving right along in agreement with that. So we're good there on our schedule. And like I mentioned earlier at the start of the meeting, I'll add in a brief summary of construction start dates and finish dates for each project as I go forward.
Okay. That'd be really helpful.
On the budget, no significant changes, as of right now. We are in a major budget update for the whole bond program. Following the last meeting, we executed the contracts with our cost estimator, with our CMGC. They are 100% in working on the budgets now, of updating them based on the conceptual designs that Miller Hall prepared and that we reviewed, at the last meeting. And so we'll be going through a review process with both of them, those firms, with DPL and with Miller Hall and Steel Architect, review those budgets throughout all of November and into the beginning of December to really reconcile where we see the construction costs being based on our new designs, to really balance our budget, make sure we're in balance with that of what we're spending on each facility. In addition, Miller Hull is doing a full FF&E budget, so all of our furniture, fixtures, and equipment, and going through and updating that budget as well for all of the facilities, and it'll track on the same timeline. DPL is working on a budget update on our collections of what, that's a line item within the bond measure and what we expect to spend on that. And we're also updating all of our soft costs. So all of our design fees, any projected fees that we'll have in the future. Excuse me. So what that'll let us do is really reconcile the full bond program budget. So the full 224 million of how it's being allocated to each individual project or property, how our contingencies are sitting in reserves. Currently, we have a large line item called reserve contingency, and ultimately I want to reallocate that to the individual projects based on their size and exposure. And we'll go through all of that with DPL throughout the month of December. And I anticipate that if everything goes as planned, in January, at the January board meeting, I'll update you on any adjustments that we're recommending to the budget. Not an increase or that, but a reallocation between projects and from the reserve line item into the individual project contingency line items. So it still remains as owner contingency, owner control, but just in a different bucket within our budgeting system. So outside of that on budget, I don't think there's too much else there. Costs, we're processing our monthly draws, as I heard Robert mention. That process, I think, is working really well of how we capture, analyze, and make sure we're vetting each invoice as it comes through and then accounting for it in the job cost so that we're always current within the current month period, which is what shows up in your summary. On the procurement and contracts, like I said, the things that you reviewed and approved last month got executed and issued. We have a current RFP out right now for work package 4, which is for the branches of Sisters, La Pine, Sun River. And we actually had a meeting with all of our contractors this morning, had real good attendance, and looks like we're going to have another good round of proposals coming in on that. Ray, I know you had asked about Griffin, and they did show up today.
Ah,
That one. So I was glad to see them. I think this is a good fit for their size of company. A lot of the other firms were firms that proposed on work packages 1 and 2. So very excited about seeing all of our local contractors coming back to us and supporting us with proposals. So we anticipate going through that. We get the proposals in end of November, do our evaluation throughout December, and we'll bring our recommendations and the results to you in January at the board meeting for review and approval.
mhm. Just to let you know, Greg, I have no preference for Griffin.
No,
I'm just curious because of the number of projects they have going in
Yeah.
Deschutes right now.
yeah. And they had always told me that they were interested, but I think they were looking at which projects were the appropriate size, which, I think we developed the work packages really, I think, is helping to attract attention from different size contractors here locally. And they all are good contractors. They just have, their sweet spots. And I think I think that's why we have a lot of attention, because all of these guys still like this. And this is our smallest construction package. Downtown Bend will be a little bit bigger, and we're still getting really good attention from all of our local community.
Let me ask you something. I've known other projects that I've dealt with, contractors pull out because they can't come up with the size, this amount of bond that's required for the project. And I've heard that other government agencies have something in their policies, their insurance policy or bonding, that allows companies that can't quite meet that bonding minimum to actually go ahead and participate. Is that something you're aware of, or is that just something I've heard rumors on?
I'm not aware of it, but I will look into it. of our teammates he's been doing government procurement for over 35 years and really understands. He's works with us to help make sure that we're following the public contracting rules and guidelines and what our options is. I'll ask him if he knows of an option like that, because I think we would like to keep those types of options open and available to the different contractors if that comes up. We do currently have a requirement for posting bonds
Right.
on the project. The other procurement activity going on is we're finishing up our RFP for the commissioning services, and this will be formal testing and inspection services on the finished product. Once we get in there for all of the mechanical systems, electrical systems, plumbing systems, fire, life safety, and it's a code requirement as well as best practices. And so we'll be issuing that RFP this next week, and it'll be, if everything goes as planned, we'll have that ready to present to you in January as well. We'd like to bring them on board. They engage with the design team in writing and developing the specifications for all of our commissioning efforts and testing. And they also do a peer review of our designs for the MEP systems, mechanical, electrical, plumbing. So they look at that. They will also assist us in evaluating our energy modeling that the mechanical engineer and our design team will develop, but to really bring a professional opinion as our advisor to make sure that what the design team is recommending, what their models are showing, and those are models or elements that they use to design the systems of how energy efficient they will be. The commissioning agent will actually have a role in that, a review role for us. And so it's kind of, again, a little bit of a checks and balances, but gives us a second professional opinion on the viability of how we're designing the systems, and that at the end, we're going to be really happy with their performance from a efficiency standpoint, a energy use standpoint, and meeting the goals that, you know, are set out by state of Oregon for energy efficiency. So,
And is that, Greg, is that a single contractor for all of the projects?
yes, they'll do the whole thing. And that way we keep that consistency as they look at different projects.
Right.
Right. So they'll be looking not only energy efficiency, but also sustainability and also environmental impact
Yes,
of the systems.
they will look at that. They'll advise on that. You know, our Miller Hall and their design team will be executing on it. But yes, they bring another level of expertise in for us to advise us in that capacity. So that's what's going on in the procurement section. I had noted under the insurance that we're in the process of processing our application for the DSIP, which is the District Supplied Insurance Program for liability. We'll have everybody enroll into that program. I imagine that we'll have quotes on purchasing that policy to put it in place in most likely February, for the February board meeting, possibly in January, just depending on how responsive the insurance carriers are over the holiday period here. So it's something we really want to have it in place when we're ready to commence construction, but would like to get it in place as we bring on our CMGCs and subcontractors in any early awards that could be happening in advance of construction. On the entitlement, nothing really has changed from what we talked about. In October, Todd executed the documents for ODOT, and those were sent back to them. ODOT has confirmed receipt, sent it on, they have to have DOJ, again, review it before they can sign it, make sure that they don't have any final comments to it, but we're not expecting anything there and expect to hear back from them this week on that. The property line adjustment, again, was executed by Todd and returned to the Brown Rig family for their execution, and we're expecting to receive that back this week as well. Brooks Resources, our land use consultant, has been engaged with them, with the family and their advisors. So that process is moving right along. Not a lot else happening right at the moment on the central library as far as our land use issues. Those will continue to progress over the coming months. With Redmond, we did have a information meeting with the city council at the beginning of November. It really wasn't in October, but we had a really good conversation with them and shared with them our conceptual design, and they're very supportive of that, of our plans and how we're moving forward with that. So I thought that was really good and wanted to share that with you. That happened right at the start of the month, and so our design team is engaging with city staff in Redmond. They have a pre-application process. So it's a way that Redmond is set up to really allow us to engage early with them and talk about our designs and let them know where it's going, and start not a formal plan check process, but a good review process. And so I think that's going to be very beneficial to the team to make sure that what we want to do, they're in alignment with it, and that they can help us move through the system as swiftly as possible. So that was a really good meeting and follow up from that presentation. As you know, we completed conceptual design for all of the projects. The schematic design process for Central Library and Redmond is well underway, and the design team is, advancing quickly. Each week we see progress and have discussions about specific areas and where they're going. We'll actually see a 50% progress set that we're going to share with the CMGC and cost estimator to help them see how far the design is advanced from conceptual to make sure that they were, anticipating the direction that we're going. So it's a good working tool for them to make sure our cost estimates are, properly aligned with the design. Schematic design will really finish up in January. So I'm sure we'll be scheduling review periods with yourselves coming up here, and potentially some in December, but definitely in January. The schematic design process for the branches will start in the 1st of December here, right after Thanksgiving. So Steel Architects will be jumping into that, and we've split the 4 branches into 2 groups of 2. Sisters and Lapine will run together, and in design, and then again in construction in the future, and then Sun River and East Bend will run together in design and then in construction. And it's just to break up the work, not try and do them all at once. So nothing really new to say today on that. We'll see those schematic designs come out in February. From finance, I think just the monthly draw was processed. The one thing that I did submit was the summary of an RFQ, request for quotation, for the Sisters Library re-roofing project. And there was a summary in there. Due to, the asphalt shingles, just age and failure, they've been experiencing leaks out there for some time and had asked us to go out for a proposal to secure bids from contractors to do a removal and replacement of the existing roof system in advance of the other work on the property. Steel Architects, who's, Miller Hull's partner, developed a set of specifications for us to use as bid documents. And we had the existing as-built plans because we're basically going to just remove and replace the existing roofing system, which would include the membrane, roof shingles, and all of the sheet metal flashings and sealants associated with that roof system. So that RFQ was issued in October. It was one that's under $100,000. So we utilized the informal RFQ process and spoke with 5 different roofing subcontractors. All of them were interested, and ultimately only 2 of them submitted proposals. The others basically were indicated that due to the current workload and what's going on, that they didn't have time to respond to our current proposal. We had one call us well after the bids were received and asked if they could still bid it, and we told them unfortunately they couldn't. But in going through the bids we did receive, one was very complete. That was AM1 Roofing. They are the highest ranked of the 2. The other one, which is Scott Roofing, didn't actually follow our instructions completely from the RFP as far as the information we requested from them using our bid form. So they really didn't receive full allotment of points. As you can see, we had requested schedule information and everything, and they didn't provide any of that information. On the spreadsheet, both of them quotes were actually fairly close to each other. AM1, who is the highest ranked, is also had the lowest cost proposal on that. So our request today is approval to proceed with AM1 Roofing to award them the contract to perform this work. It was planned and would be scheduled with the library, and they will do it in a methodology to, as they remove sections of the old roof, they install new waterproof membranes that very same day. And that's to always maintain a watertight condition on the roof and not leave the library exposed from that standpoint. But those are the details we'll work through with the contractor. I don't know if you have any questions about that award. Yes, Todd.
Do you have a recommended not to exceed amount for the?
Yes. I would put it at 100,000. The only things, there are a couple of alternates that we are talking to the low bidder about. But right now it looks like it'll stay at their bid quote at 85,103.
Okay. Any questions for Greg on this? Cynthia?
Yes, Cynthia.
Just about the roofing or about his report in general?
Well, let's do the roofing motion first, and then we can go back to the report if that's okay with people. Does that make sense?
Absolutely.
Okay. So any other questions about the roofing?
Yeah. I look at this and I'm wondering, is this a repair? Or is this a part of a new construction? Because we're not actually reconstructing the roof line on the library. Would this be classified as standard repair? The roof is decaying, the structure is failing. Normally, if we paid it ourselves, we would call this a repair. Why are we putting this into the bond?
Well, I think it was anticipated as one of the elements to be addressed as part of the bond upgrades, as we go through. So we're actually not repairing it, but we are actually replacing the entire roofing versus repairing sections of it. But I think that the bond does address repair and replacement of existing elements of those buildings. And this is across the board, as we look at the conceptual design scopes for all of these buildings. There are elements in there that are part of the renovations because things have reached their lifespan, as we go through, like on some of the mechanical systems, Sun River in particularly, those systems are at the point where they need replacement because of their life. They're not going to last that much longer, or they're not performing well. And so I think this is a component that it would be covered under the bond. It's just, we separated it out from the putting it underneath the CMGC in order to advance it to be completed early and try and get it done before we go through another full winter.
We don't have any contracts for this work project, but we want to expend money toward the work project prior to a contract for sisters.
We would enter into a contract, a construction contract with AM1 Roofing directly between the district and AM1 Roofing.
How does that become part of the bond then? In my mind, this sounds like a repair process.
Yeah, within the architect's scope of work part of their scope of work was to develop this scope of work. So as their design scope of work was to prepare this, the specifications and scope of work, they'll do their normal construction administration of reviewing any RFIs, reviewing any submittals, and site inspections during the course of work. So we purchased the design scope as part of Miller Hall and Steele's overall package. All we asked them to do is to advance it separate from the CMGC package.
Well, wait a minute. These projects were never going to be CMGC. The two CMGCs were going to be Redmond and the Central Library. These are separate work packages that you've just broken down into the two, right?
Well, no,
so
when
Sisters and Lapine are going to be one, but there are no designs, conceptual designs, maybe, but nothing addressing structural design. My concern is this truly a part of the bond that the voters vote for remodeling their libraries to get more space, more children's areas, more book space? Or is this just normal repair and maintenance of our facility? And it sounds to me like, even though we're replacing the entire roof, we would do that ourselves and not put that on the taxpayer through a bond. So I'm questioning whether this should be a bond expense or just a repair on our part for maintaining our existing facility. Later on, you could discuss whether this could be reimbursed by the bond monies. If the architect were to come back and say, we would have done this redesign of the building, and therefore you would have to take off the roof and redesign the roof in a certain way. But if it's the same, I don't see why this is not just a repair.
Todd, you had a comment?
Yes, I just want to point out that our bond this measure would authorize the Deschutes Public Library District to issue up to $195 million in principal amount of general obligation bonds to renovate, upgrade, construct, and equip library facilities. So I believe that fits in there. And also in the ballot title, we are very specific about repair, modernize, and upgrade Sisters, Sun River, La Pine, Downtown Bend, and East Bend libraries. So the repairs were always factored into this project. That was part of our factoring in the dollar amounts.
Mhm,
Up
mhm.
to 195 million.
I'm sure-
Right, that was my understanding, is that we looked at what needed to be done on each building as a whole to bring it up to 21st century standards, including repairs, everything that needed to make that building fully functional. And certainly a roof that doesn't leak is within the scope of that.
That was my understanding of the bond too, that repairs would be part of it. I didn't see that was not part of the bond.
What I'm saying is, we don't have any designs for Sister yet. What
We
if
have-
the design came back and said, no, we're going to change the configuration of the building, and we want a roof line that's totally different. We just went ahead and rebuilt a roof, replaced it totally without any total design for the building itself. This is sort of like we're going in piecemeal to do it. I have no quibble with whether, if you want to classify this as bond expense, shouldn't it be part of the design that the contractor is looking at for the design of the Sisters Library? Here we're saying, it's almost like saying, well, we'd like to have stained glass windows on this because it's nice, so we'll put them in now because the windows are getting leaky.
So as
Later on, there may be no design for these windows.
Right.
We can't go into a project that has absolutely no project in it yet.
So
That's
as
my concern.
did the conceptual design for Sisters, as they've done their conceptual designs for all of the properties. And in our discussions with them, because we told them that we wanted to replace this roofing material, we talked about, is there any need to be modifying the roof itself, the structure, the shape, or its size as part of the overall renovation of the building? So that was taken into consideration of, would we be changing this roof in the future? And the answer was no. The other elements of the renovation project for Sisters is really focused on all of the interior space, the entry, the outdoor patio space, but not anything affecting the roof itself. So we did have that conversation with them, and that's, they developed their concept designs, kind of reiterated and confirmed that. So and that's when we said, then prepare for us a specification for the removal and replacement of the asphalt shingle roofing system. So we're actually not going to change any of the structural elements. We do have a unit price with the contractor that after they remove the shingles, the existing roofing material, if we find any damaged plywood from water intrusion that is happened previously, that will remove and replace that. But the shape of the roof, the limits of the roof, the eaves, the overhangs, all stays intact, and nothing changes in that. So it was taken into consideration through the conceptual design process. And then as we came out of that, they were able to develop our specifications so that we would have a document that we could go out to the roofing subcontractors to price.
But from what you've just said, it sounds to me like the repair on the roof is totally independent of what we told the voters we were going to do: repair, remodel, upgrade.
No.
The building itself, you're saying the roof, even the architect is saying, we're not going to change anything. It's not in our conceptual design. But yet we're saying we need a new roof. Fine, if we need a new roof, put on a new roof.
What I meant by that,
I'm not thinking we should put it on the bond.
right, what I meant by that is that the other improvements that we're going to do to the Sisters building
Uh-huh.
will not impact the roof to where we would go in and tear it off. If we knew that we were going to modify the roof structure for some, so like in Sun River, we're going to modify the roof structure at the entryway. On Sisters as well as Lapine and East Bend, we currently have no intentions of modifying the roof structure. And because we're not modifying it, then we felt it was prudent to repair the roofing as soon as possible to prevent any further potential for water intrusion through the next winter season and the next rainy season next spring, before we commence actual construction on that project. So the scope of work was planned. It was just that we want to advance it earlier than having it included in the full renovation of the project.
Right, this just allows us to get a jump on this portion of the project in order to prevent any further damage from weather or whatever.
Yes.
To me, it just seems prudent. I mean, it's an easily segmented thing. We have, our architects have provided the specs, and we can get it done a year earlier, and that should be a benefit to us.
Yes.
I have to disagree. We don't go into a project without designs and a contractor. And to advance, say you want to advance this because it's prudent, we could say that for almost anything in the project then. At what point do we say, well, we think it's nice, it's good weather, so we should construct the parking lot for Central Library? Because it's good weather now and it costs us less and it's prudent. There's no design yet for it, but you want to have one.
Well, we
We're
do
just
have
talking.
designs, Ray, I think, but
We
I mean,
have-
we can agree to disagree on this.
We have conceptual designs. There's nothing firm you could not start building tomorrow from the designs we have.
Well,
If this
I
is
think,
part of the construction for Sisters, then we should have a package that says, here's the design for Sisters. I don't disagree that if you say we need a new roof, we should put in a new roof. What I'm saying is we should take this as normal maintenance and repair. And if later on, you can somehow justify, like the land purchase, you could justify that it could come out of bond and the bond council says, yes, you can do that. Then fine, we can reappropriate just like we did for the land purchase. But to say we're going to do this as part of the bond itself without having any design firmly in place and no contractor for the Sisters project, I think it's inappropriate. We should do this and pay for it out of funds that we have. I mean, we could probably afford to do this, right, Todd?
You could afford to do it. You would have to have a supplemental budget hearing because you did not budget for it. This is really, everything you're saying is, yes, you could look at it that way. We could pay for it in that way. We anticipated the repairs when we did the bond. That's why we put the repair statement in the bond language. It really comes down to, for the board, you're gonna have to decide which direction you want to go. I recommend that this fits in with the bond language. I also recommend that it's prudent to do these repairs now so that we don't get in a situation where we have further damage to the Sisters Library, and that's costing taxpayers even more money.
Yes.
And it doesn't need to happen.
well,
Go
I
ahead
think,
and by all means, do the repairs. I'm just saying, where are you going to classify these? Which funds are you going to use to make the repairs? By all means, if you say we're going to have leakage, it's prudent to do it now. We should do it now. But
well,
are we thinking,
I think you've explained your point of view, Ray, and so I think it's up to the other board members to weigh in. If someone would like to propose a motion we can vote on a motion, or if there are further questions from other board members, we can address those.
I did put some suggested language if you want to use it in the chat for this.
And I just want to say that I agree with the language of the bond, that it is a repair. But my concern is that we're kind of out of sequence. As Ray was saying, we don't have a formal design yet stipulated, and yet we're moving forward to do, you know, a pretty substantial repair on the building. So I guess my concern is we seem to be out of sequence. We're going ahead to do something to the Sisters Library without having a conceptual or a final design accepted or approved.
Yeah. So
Greg?
Cynthia had a question?
Well, I didn't have a question. I guess I wanted to make a statement that I guess my feeling on this is, I mean, I understand what both Ann, Ness, and Ray are saying, but my feeling is if the architects and the owners rep have discussed this and the DPL team has discussed this and it's making sense to them, it falls within the purview of the bond. And except for the architects who've already weighed in saying they're not going to change the structure of the building that's going to alter the roof, I have no problem with us moving forward with using the money from the bond to fix the roof, to replace the roof.
Right. I mean, that's kind of where I'm coming from. If there were if they were thinking, well, maybe we need to change the building footprint, or maybe we need to do something different with the entry or whatever. If there were a design change that was being contemplated that would affect the structure of the roof, then I would say, yes, it is out of sequence. But because none of those things are being contemplated, I can see advantages of going forward now rather than waiting. Because as Todd said, if damage occurs, then that's going to be costly to the taxpayers, and it's going to end up in increasing costs.
I did want to reiterate that the architect has completed their conceptual design for Sisters. And they were the ones who actually wrote up our scope of work through the specifications that were used for bidding and would be used as a contract document. The other contract documents that we'll use for that are the existing as-built plans of the Sisters building, which shows the limits, the size of the roof, the details. The architect supplemented any additional details they wanted in their specifications. So we do have a set of contract documents that will be used with the contract with the contractor.
Is there any potential, Greg, of speeding up those, moving along those conceptual designs so there is, I guess, a consensus that yes, we won't be changing the footprint or the roof line?
No, I think the conceptual is completed, and those are actually that start into schematic design, end of November, 1st of December. But they wouldn't be able to be accelerated before we would want to commence the actual roofing process. I think they need to be allowed to take their normal amount of time and process to really fully vet through the design of the interior renovation.
Okay.
Let me ask you, Greg, have you participated in other large contracts like this where this type of situation has come up, where you do a major expenditure on a building prior to having firm design and a contractor in place and just go out piecemeal? Because the other possibility here is if the contractor goes in with the roofing, and we've seen this on our own buildings, there's additional repairs necessary after the fact because things have happened. You know, whether in installation or material or design of the roof, where more had to be done. In this situation, if this happens and the general contractor comes in and starts working, and we find there's something wrong with the roof still, then we run into a situation where the roofing company goes, we didn't do it. They did it in their remodeling or work that they did up in the framing or whatever. And the contractor is going to go, oh, no, this is a roofing job. And now we're going to be.
Yeah, I think that as far as the question of have I done this, and I would say yes, you know, on many large multi-phase type projects, you often have, sometimes it's termed make-ready work, right? Where you're doing some work in advance to allow departments to move, to allow operations to move to then execute another phase of construction.
Right.
You go through and you're going to hire, you know, contractors. Sometimes it's one contractor executing all of the work. This one, because it was set up to be purely on the exterior of the roof, we got the confirmation from our design team that they didn't anticipate any modifications to the roof and that they didn't see any reasons to not proceed, you know, with the re-roofing project. I think it's a clear delineation between the scopes of work of what the CMGC and their subcontractors will be doing in the future and what the roofing contractor is going to do at this point in time. Is it possible that there would be a penetration or something happen to the roof? Absolutely. I couldn't say no, because any renovation, even after our CMGC does the planned work in the future, it's always possible to have penetrations or modifications done. This roof has a 30-year guarantee on materials and a 5-year guarantee on labor. And so I think that anytime that you do have that over the life of that roof, you need to look at, hey, if you're going to make a penetration or modification to that roof, you're going to want to bring back the original roofing contractor to look at what those are, perform any necessary modifications to the roofing system, to the shingles, to the waterproof membranes, to maintain that warranty as you go forward. And I think that through our process of oversight during the construction of the roofing with ourselves as owners reps and the architect in their construction administration role, we also have a roofing waterproofing consultant engaged as part of the architect's team that will also be engaged to do field inspections for us at the life of the project on all the properties.
Yeah, no, I'm more concerned when they're doing
And
demolition.
so they would, pardon?
I'm more concerned not in penetration, but they're doing demolition in the building, quite extensive demolition, and there can be structural movement, and that can affect the integrity of the roof. But who would be responsible? I mean, there's that possibility. But I agree with Ann. We're just
Right.
taking this totally out of sequence. If this is a part of the repair and remodel and upgrading of the sisters library, it should be part of that whole project. It seems like it's occurring before. By all means, let's do it. Let's pay for it. And then we can discuss later on. Does the bond attorney say, yeah, like the land purchase, we can recoup the costs because it is part of the repair or remodel of the building. But just say we're going to go ahead and pay somebody. AM1 is a good, you know, I interviewed them when we did our roof and for the fire stations too. I mean, they're a reputable company, no question about it. But when we're building a lot of the
Right.
fire buildings, we would never say, yeah, let's put in some new roofing on the older buildings before we have a complete design for the new building. I mean, you just don't do piecemeal work when you're dealing with government projects like this.
Well, I'm
But Ray-
confused, Ray, because you're saying we should go ahead and do it and pay for it and then see if it applies. And then you're saying it's not good to do it now.
No,
So,
I'm saying you do it now. If Greg is saying this is gonna leak and we need to repair and replace the roofing, we should do it now. It's prudent. We should pay for it. And then we can look to see whether we can recoup the costs.
well, the
From the
reason
bond.
that we recouped the costs previously was because we didn't have those budget categories. And so we had to go back and say, these previous costs are appropriate for the bond. And that's the reason we did that transfer. Now we have the money in place. So it's not a matter, I mean, it's one question if you're saying this shouldn't come out of the bond, and that's a decision for the whole board to make. In my estimation, it is an appropriate cost from the bond. But to say we should do it now, and then to say it's out of sequence and damage is going to result. I mean, the two statements, I'm confused over what the difference is. Whether the problem is with doing the work now or how it's paid for. You seem to be arguing both sides to me.
It's both. It's out of sequence. And just saying, because we got the bond money, we should go ahead and expend it. It is not a reason to go ahead and expend it when it sounds to me, normally when I read this, I said, this is a repair. This is a normal repair on a building that we own. It isn't even in the works yet because there are no contracts for this thing. There's no repair remodel for the systems library yet. How can we say this is a repair on a project that hasn't been bid yet? It doesn't exist. It says, it seems to be like we're expending the funds because we got it. We want to pay for it out of anybody's money other than our own.
Well, I think.
That's just unethical.
Well, I think what we need to do is, I mean, I think we understand what you're saying, but I think we need to have some kind of motion on the floor to discuss and for other board members to weigh in.
Or should we get our bond attorney's opinion?
Well, I think I don't think we need a bond attorney's opinion because I think the language is clear that that repairs are part of the bond, that they were figured into the cost of the bond, and that was part of the understanding from the beginning. I mean, it's my understanding of everything that we discussed leading up to the bond. So I don't think we need an attorney's opinion personally.
So if we need to repair the toilets in the systems library because they might leak or they are leaking, we should charge that to the bond without knowing where they're going to be in the future.
Well, I think,
I mean, it's a matter of what you think is the right use of the public's money. I'm saying,
Right.
yes, let's do the repairs. We can afford to do this. Let's do it. If Greg is saying this is absolutely, absolutely necessary before it starts to snow and rain more, we would normally do the repairs. No questions asked. But is it part of a project that doesn't exist yet? And it's totally out of sequence.
well, I think we have a recommendation from our owner's representative that we proceed with this. Do I have a motion? Does anyone want to make a motion? Cynthia?
Yeah, I move to award the Sisters Library re-roofing services contract in support of bond-funded construction projects to AM1 Roofing and authorize the library director to sign the finalized contract in the amount of no more than $100,000 and all associated documents.
Do I hear a second?
I'll second.
Okay, any further discussion? It's been moved and seconded. All those in favor?
Aye.
All those opposed? Any,
I abstain.
okay, Motion passes 3-1 with 1 abstention. Okay.
I do have a couple of questions to ask Greg about other aspects.
Oh,
of the
yeah, let's
report.
go back. Sorry, Cynthia, I meant to go back to the original report, right?
Can I do that?
Yes, you may.
Okay. So Greg, one of the questions I had was, actually I have two questions I want to ask you, but one is there a plan in place for when East Bend, Pine, Sisters are under construction? Is there a plan in place for how the library users are still able to use the library?
We haven't finalized that plan, but it has been discussed about what type of temporary facilities we may implement at each location, which can be different based on, do we potentially put out a temporary trailer where people will be able to come in, pick up, have minimal activity and use there, potentially adjacent business or operations. In La Pine in particularly, we talked about the Parks and Rec department operates in the building that the library was previously in, and they may have a space within that building that might be an option. In Redmond, we're looking at finding, a space to use because of the size of the existing facility and the community, that we'd want something, that's much larger there, and because of the duration of that construction. So it is in planning, but not fully defined yet.
And so I know it's been discussed that Redmond will have a site most definitely, because as you said, there's going to be a longer time period there. Is that information out, because of what the woman who spoke from Redmond, she was under the misconception that basically there wasn't going to be any service in Redmond while the library was, at least that's my understanding of what she said. So is there going to be something on the website where the conceptual designs are placed or something letting people in Redmond know that yes, you still will be able to access the library services in some capacity in a different location?
Yeah, I don't think that it's on there today, but I think after hearing that comment today, I know internally we're talking about it. That'd be something I'd talk to Chantal about, looking at how because I think we should put it in there for all of the facilities. So any of our community members looking that may be interested in their local branch know that, hey, we are looking at plans for temporary facilities, and that we'll continue to update them as to what they'll be and how they will access the library.
Okay, great. Thank you. I appreciate that.
Uh-huh.
And I had a question about the FF&E budget. I assume that includes, well, I mean, I may be wrong, the automated materials handling system. And I was wondering if Todd could speak to where we are in estimating costs for that. I mean, that's got to be a complex set of decisions. And so how do we get the budget right for that component?
Good timing. We're right in the middle of kind of estimating all of that. And Lynn's been working hard on that. Lynn, if you're out there and would like to chime in.
Yeah, that's a really good question, Anne. And I have been working closely with our FE Tech representatives and also Miller Hall. We've had a couple of different meetings already, and we're working on pricing right now, not just with AMH, but also additional self-check kiosks, internal and external chutes, all of the equipment and all the accoutrements that go along with starting a new building. So I hope to have that finalized by next week. So when we look at the FF&E budget, that will be included in it.
Okay, because I know it's going to be expensive, and I just wanted to make sure that we didn't
Yes. Yeah.
discover things late in the process that we thought, oh, I wish we would have budgeted for that, you know.
No, I've got a pretty massive spreadsheet going, and I've talked with a lot of our operational people as well. We've got a lot of feedback from our staff and how things work, and it's just been a quick process, but it's been a good process.
Good, good. Okay, thank you.
Actually, Lynn, which other branch libraries will have the automated equipment?
I think that the Redmond branch for sure will have a smaller version of an automated handling system. And we're hoping that with the, when we get into the schematics of downtown Bend, that we're able to also put one in at downtown Bend as well. In addition, at our smaller branches, there's a piece of equipment called a smart bin that we hope to utilize in lieu of an automated handling system, because they just don't do the volume there as downtown Bend, Redmond, and Central will be doing. So yeah, we're looking to automate just as much as we can at all of our locations.
So you'd be looking at East Bend too, because it has a extraordinary amount of checkouts and returns.
Yes, absolutely, yeah. All of the locations.
Greg, let me ask you, when you met with the Redmond City Council, and I assume Durac is their urban renewal,
Yes.
right? You presented to them that the new library, the library would be demolished and a new one is built there. And you showed them the preliminary schematics.
Yes.
And what kind of response did you get? You said it's very positive and supportive, but what was it? What did they have to say?
Well, I would say they like the design.
Uh-huh.
Really excited about the library staying downtown and on the current property.
Uh-huh.
They liked, I think, the growth, the increase in size and capacity of what the building is going to be able to offer to the community. There's some, excuse me, only so much that they could see as far as what is the building going to look like. But they really understood how it operationally was going to change in the amount of programs, amount of collection, the amount of amenities, column, that will be offered to the community, whether it's through the community room, the study rooms, the workspaces, those elements. I think they liked how the building was being laid out on the site to really engage with the civic core there. They've got the civic park right across the street. We've got Caddy Corner is City Hall. And how we have our outdoor plaza on that corner that really kind of speaks to City Hall right across the way there. And then directly across the street is the park. They liked those elements. They liked our drive-through, I think. The fact that, community will be able to drive in and drop off and pick up books, which is really convenient for all of the users, depending on what is the weather, what's their situation, family and wanting to keep the kids in the car and just drop off and pick up. I think that convenience, I saw those were things that they looked at as being, really great elements of our project and design.
How do they feel about the parking?
They were very comfortable with, we're actually able, by the way our site is laid out and the way the building is pulled more to the front, we really get a very efficient parking design. Right now it's U-shaped. Now with that rectangular parking element in the back, it's accessible through 2 streets, but it's very functional in getting a large quantity of parking spots that meets the requirements. We utilize the parking along the perimeter edge on the streets. They like that. They encouraged us to recognize and use the public parking, that parking lot that's right across the street.
Right.
Because, they feel that, hey, they've added public parking facilities there. I think, they're working on their bus transportation with CET there in town, and they have routes. And one of those routes will be right just one block away. And they have a program that if a rider wants to be dropped off at the front door, they just make that request and they are able to be dropped off. That's the way CET and Redmond are operating that. So I think, you know, because we're in that civic core of community and of the town, that those were the things that I saw and the impressions I got from both the direct committee presentation and to the city council presentation. And Miller Hall did do the presentation. So, you know, Ruth, and she took them through. And so what they saw was the presentation that you guys saw of the conceptual design, and talked about all of those same elements and had many similar questions as what you guys generated and what other community members have generated.
So any comments they made
Very
that,
positive.
any comments they made that they would like to see difference?
No, I don't really think that they asked that we change anything. They asked, both of them asked about how do we recognize the, you know, original building and facility. And we, as had built into our conceptual design and presentation, was that we are looking at how do we reclaim some of the old original materials, whether it's some of that original brick that's in the interior of the old building, and then some of the old original millwork, and really utilize those materials in our design. And Miller Hall was able to talk to that, and they're thinking about that. What are those parts and pieces that we can utilize in the new facility to really have a remembrance or recognition of the original elementary school that was there.
Okay, any other questions for Greg? I think there was a complete report. It's good to have this update, and a lot has happened even only a few weeks later. So
Exactly.
yeah.
No, the project's moving fast and doing well. So we'll have another update next month with plenty to talk about.
Okay, thank you so much, Greg.
All right.
Thank you.
Thank you all. Bye.
Okay.
Thanks, Greg.
Okay, Todd, do you have library news?
Just a couple of updates. We are moving forward with our checkoutable hotspots, and so those will be coming live in the next week or so. So stay tuned for that. You'll see announcements. And our biggest activity right now is the public engagement around the building projects. And we have met with a number of groups already, and we have the public engagement happening directly with watching the videos and putting in comments. So we're getting a lot of activity in that direction as well.
I have a question around the public engagement. I know many of my neighbors and community members are really excited about the opportunity to go on the website and give feedback. Will that information be collated and summarized and presented to us? Because I'm just real curious as to hear what you know, our constituents are thinking about when they think about their libraries.
That's a good question. I think our first goal was just to have information to get to the architects, and I think that's a good question for them as to how we can get that into a format that you can all read without having to go through 800 different comments. So
Right.
yeah, so I'll work with them on what that looks like.
Thank you.
Mhm.
Okay, any other questions, comments? As far as foundation news, we have the novel idea unveiled program coming up on December 5th. at 4 p.m. And that will be a virtual event. So find out what the 2022 novel idea is. It's going to be a really interesting book, and I think it's going to have some really great local programming. Well, I mean, the programming is always great, but I mean, I think it's going to have particular interest this year. I think it's going to be very compelling based on the choice of the book. We are in the final process of finalizing our slate for novel idea. I mean, for author next year, we're going to have 3 virtual presentations, and we're just nailing down the final author, who's, I think, really going to be, well, all 3 of them are very well-known authors. They're very exciting, and I think people will really respond. Those will be virtual as well this year. And then hopefully, we'll be able to get back to live presentations in the future. So the foundation board is busy securing sponsorships for that program. We've gotten our first major one in already, and people are working hard to secure sponsors to pay for that event. We're in our 10th year, so that's pretty remarkable. I think it's been a really great gift to the community to have the caliber of authors that we've had over the years come in and speak to us, and even talking to people in other metro areas, they haven't had the opportunities to hear the types and quality of authors that we've had locally. So I think it's really been a great event. Cynthia?
Yeah, is there also going to be an unveiling of a youth book at the novel idea? Is there a youth book this year like we had last year?
Chantal?
Yes, there is. Thanks, Cynthia. Yeah, so that was so popular, we're doing it again. And so we will be unveiling both books that afternoon. Yeah.
Oh, great. Good.
Yeah. And they the themes tie in together again. So they work well. They complement. Mm-hmm.
Yeah.
That's great.
Yeah, and as I said, I think this book is going to have particular local interest. So I encourage you all to attend the virtual event. It probably is not going to be quite as rowdy as the in-person event, because it is if you've been to it, it's a really wonderful celebration of reading. Anyway, that's where we are on that. So self-review of meeting.
Oh, hey, Ann,
Yes.
let me ask you, I remember last month, Chantal said we had over 9,000 people attend the novel idea.
Yes.
What did we have before the pandemic when we had it in person? What was our high number?
We had around 6,500 to 7,000. So what changed is because it's online.
Yeah,
Those
well, sure.
people, we counted like the 10 days from the live event out to include those people.
Oh.
So, yeah. So we had actually less on the actual day than we would normally, but when you count in the number of people who viewed, it went up to that amount. If that makes sense, because it was online. Yeah.
Oh, so on the day of the event, we didn't have 9,000.
No.
And that 9,000 is all of the programs for the entire month combined,
Right.
not
Yeah.
just for
Right.
Yeah.
Because
So
Ben High can only accommodate a little over 1,000 people.
Mhm.
So that's
Yeah,
the
14.
maximum that could attend the actual author event in person. But people, I mean, they've got programs throughout the county, throughout the month preceding. And so a lot of people go to those programs. Are incredibly popular.
Yeah, that's with the live event, right?
Right. But now
Sorry.
with virtual events, people are tuning into all the virtual programming as well.
So
Yeah.
what is it about? I mean, 6,500 for live events versus 9,000 or so in the pandemic.
I'm sorry, what was your question?
Oh, I'm saying before the pandemic.
Yeah.
We were getting about 6,500, 7,500 people attending all the programs.
Yes,
And during the pandemic, we had about 9,000.
yes.
Okay.
Yeah.
Thank you.
I think it's still ranked as, Chantal, is it not ranked the largest community read program in Oregon
Yeah, and in the Northwest.
and in the Northwest? That's, I didn't want to over
Really? More
brag, but I mean, that's pretty remarkable.
Greater
Yeah.
than Seattle?
Yeah.
I knew it was greater than Portland, but wow, I'm impressed. I didn't realize it was greater than Seattle. Cool.
Yeah,
You guys-
Seattle's around 3,800 to 4,000. We haven't checked since the pandemic though, so we have to check those numbers, but prior to the pandemic, yeah.
Oh, and I think the thing that is especially impressive is you look at, there's total numbers, obviously, but then there's the percentage of the population participating. And that's really high when you look at the entire Seattle district and that many people participating versus 9,000 people. And of course, not all of those are Deschutes County residents, but say for 6,500 people to participate in a county our size is really a pretty remarkable level of participation. And that's not including all the people that read the book and discussed it in their book groups and didn't attend any of the programming. So
We do. Okay. Sorry,
I was
Cynthia, what were you-
just gonna say, I have several friends that are snowbirders, but they read the book and they're part of our book group. And then when they go back to the South, be warm, they log on and as library users, they lived in Deschutes County during the summer months, and then they moved down south during the winter months, but they all participate in the different activities with the novel idea.
And just to clarify, no, it does include, we include all the people who have checked out the book. That is in our
okay.
numbers. Yeah, yeah.
Oh,
okay.
Because to us, it's participation at all levels, right? So we're not saying that they only have to attend a program or that they only have to read the book. So we include all numbers, and that's what Portland does as well. And
Right.
Seattle, they're looking at the full package.
I had forgotten that. Excuse me, but it doesn't account for all the people who buy the book.
Not really, yeah.
the important part.
And I have a whole bookshelf that
I
is
do too.
just novel idea books. I mean,
I do
people have
too.
different ways of categorizing their books, but my novel idea books are because they're just really good memories of what a love of reading this community has, and I think we're lucky to live here because we have a lot of dedicated readers in Deschutes County.
Yes.
Chantal, you said that or maybe Ann, you said that it would, the novel ideas at December 5th at 4 p.m. I thought
Yes.
it was 6, but I also had that the link would be released at 5:30. So if it's at 4 p.m., does the link get released at 3:30?
That's a good question. Yes, the link would be released at least a half an hour to an hour prior.
Okay.
So I don't know the exact time, but I'll check in with Liz and her team. But yeah, it'll be released at least 30 to 60 minutes ahead.
Okay, good.
Yeah. And it'll be on our site, on the website.
Okay.
Yeah.
Okay,
Thank you.
so self-review of meeting. Do you want to start, Ann?
Sure. I'll have to admit that my head was kind of spinning when we went through the audit and the budget numbers. So I greatly appreciate Robert and Brenda's explanation, because that was really helpful. If we hadn't had that discussion, I wouldn't have the understanding that I do now. So good job, Robert and Brenda.
Cynthia?
Yeah, I agree with what Ann just said. I really appreciated their explanation. I also wanted to say, I felt we had some tough discussions today, and we didn't always agree as a whole board, but I felt like it's important, and I really respected the fact that people listen to one another respectfully and listen to the differences of opinions. And I think that's what makes us a good, strong board.
I agree.
Right. Thank you. Ray?
Yeah, I think, Robert, excellent job catching some of the things that you did, getting our outside CPA, who actually says they know how to do bond accounting. But I think it was great that Margie and our old CPA came back and said, we can't do this. It is complex. There are certain things you have to do with bond money. And I appreciate Brenda's explanation of that situation, that it's not really a material deficiency that couldn't be repaired or corrected. And it was corrected well before the audit was finished. So excellent to Robert, excellent to our accounting staff. Good job, well done.
Bunny?
I will reiterate what everyone else said. Numbers like presented like that can make your head spin. I don't know how they do it, but I really appreciated their patience with us and the questions that we ask, and walking through them one by one. It helped a lot. I also appreciate Greg when I asked him about when will the libraries, specifically Central, when will they start, when will they end, and him coming right back with that and saying, I should add that. And for each one of the libraries, I should add that. So really understanding our position with our constituents too. So kudos to him. And kudos to Todd for also helping out with this budget information. Your explanations helped a lot too.
Okay, Todd?
Well, I echo everything everybody said. I really appreciate this discussion. It was some tough decisions there, but mainly because you could look at everything in two different ways. And so I appreciated the level of discussion we had. And definitely big thanks to Robert, to Brenda, to Greg. We're in good hands with people that can explain some difficult concepts to us. So I appreciate having them on board.
Yeah, well, thank you. And I agree. Going last is always the easiest because I agree with everything that everyone said. And and these budget, these audit questions are always hard for lay people to really get their heads around in some cases. And I think Ray can remember when our audits weren't as in depth, shall we say. And so I really appreciate how much Brenda digs in and really holds our feet to the fire and makes sure that everything is exactly right. And I agree that they did she and Robert did a great job of explaining that to us. And it gave me the assurance I need to know that the issues have been corrected, that we have a good plan going forward, and that we're doing the things that we ought to be doing. So I think it was great. And so, yeah, it was a good productive meeting. It was a hard meeting. There was a lot of detail work in this one for sure.
Yeah, and I had one last thing.
Yes.
I just wanted to take a moment out, and this is our first official board meeting since the passing of Linda Davis. And I just want to acknowledge that Linda was such a huge part of our library board for so many years. And a lot of the work that we are doing now and that we will be doing for the next many, many years are the results of the work that she did. So I just wanted to acknowledge that it's sad news for the library. But it's so heartening to know that she had such an impact with us and that it's going to continue.
Thank
Absolutely.
you for that recognition, Todd.
Yeah, thank you. I appreciate it a lot. And, you know, in talking to Linda after she left the board, she often said that she viewed her service on the board as one of the most rewarding, important things that she did in her entire life. And I mean, this board and the library system really meant the world to her, and she's just a remarkable, remarkable lady. I'm really grateful that I got the chance to serve with her. So,
Absolutely.
yeah. So with that, I think we'll adjourn this meeting and we will reconvene tomorrow at 10 a.m. in person.
And should I make a note that the board work session is listed on my sheet as November the 11th at 10 p.m.
Oh, okay.
I just looked at that and I thought, whoa, wait, that's a little late for me.
Yeah, really.
Well, we'll leave the lights on for you.
Yeah, exactly.
You're right.
I did not look.
Didn't catch that. Oh, wow.
Well,
Also a reminder that it's going to be at the Downtown Bend Library in the Brooks Room, not in the administration building, okay? So
Yes.
don't forget, it's over across at the Brooks Room.
okay.
Okay.
All right.
Masks are still required?
Yes.
Yes,
Yeah,
they
they're still
are.
required in Oregon, yeah.
Okay.
Okay. Thanks so much, everyone.
See you all tomorrow
Bye.
morning or tomorrow
Thank
night. whichever it
you.
is.
Yeah.
Bye-bye.
Bye.
Bye-bye.